Alright guys, welcome back to the channel. This signal has never shown up on a macro chart of Bitcoin and been invalidated. Now this is a good thing for the bull market, for the bulls. You want to see the price go higher. This is what you want to see. And after the last 16 days with this very fast rise out of the $74,000 low to the current high of nearly $95,000, we're now on the verge of invalidating this macro bear market signal. I want to go through how that's happening and why it might be happening, how it's affecting the crypto markets, and I guess what we can do from this signal if it is invalidated. Make sure you hit the like button, subscribe to the channel. This is the content that we go through nearly every single day here, looking at the stock markets, the real estate cycle, the economy, and of course, Bitcoin and cryptocurrencies, how you can actionably use this information for your trading and investing. So with that said, let's dive straight into the analysis. Today we find ourselves $94,700, basically a few $100 short of a monthly swing break. Within 1% now of breaking through the high that was set on the 2nd of March. That is going to be the key level. So just a few $100 short here. It's been basically a step-by-step process to get to this stage for BTC, like we looked at in the previous video, looking at the overbalance in time and price to the upside. That gave us our first short-term bullish signal. Now we're looking at a change in trend on a larger scale. So let's start to break this down to see what it does, what it can do for Bitcoin, what it can do for the total cryptocurrency market, and a little later on, I'll go into like how this is potentially playing out, why it's playing out, looking at the stock markets and the economy as well. So I like to put all of this together and not just focus on BTC because of course everything is interconnected and it's not just one thing or the other. Everything's basically interconnected with their charts and long-term macro cycles. So at the moment we find ourselves here. This is this big green bar, literally 2 and a bit weeks ago, was all the way back down at $76,000, $75,000, $74,000, and this bar was red. And you might notice the little arrows on top of the bar, these things right here. This one here is red, 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 and that gives us our 3 bars down. And you might have noticed that we've used this before with the shorter term charts, so looking at the daily charts, and these have given us very strong changes in trend. This happened in December 2024. You can see the 3 red days from a significant turning point right at the top here, 1, 2, 3. And then that basically held down the market, just a slight new all-time high. And that was when the president was inaugurated. That was the only thing that it could do to get past that previous top just by $1,000, less than 1%. And then the collapse began. That was a 77-day collapse so far. Of course, the price has risen here. We haven't broken to a new all-time high. So this could continue on and break past this low. But at the moment, it doesn't seem like that is going to happen. So this particular signal we've seen here before, December, basically called the top and then the market corrected from there. We also saw it in March of 2024. Here is the previous old all-time high, 1, 2, 3 red arrows at the top here, and then that basically held the market up until this August low came in 144 days later. So nearly 2 times the amount of time than what we've currently seen. So from that top to that low, about 144 days until the market was able to break through into a new all-time high. That was about 237 days later, basically 8 months. So this signal was extremely valuable for us to identify a significant change in trend, and that's what it led to. Now there's several other examples which I've gone through on the channel. You guys may remember those. 2021, April, we also had a 3-bar down rule at the top here, all-time high, 1, 2, 3. You can see them here on the red arrows, and then that gave us this huge correction over 50% from the top. Now, of course, this is mixed in with a few other signals, but just to keep it nice and plain and simple for us to identify here and then look at what might be happening moving forward, we'll leave it with just the 3 bars rule. So now you can see we've got this 3 bar rule from the top. We can use it across any time frame. and have done so quite successfully here on the stock market. The US stock markets is the S&P 500. So if you're using your GAN Swing Pro, you can find this a link in the video description. Go and connect this to your trading view. It's also got forward returns and our predictive cycles, basically a composite of cycles that gives us a roadmap to the market, especially useful for our long-term investing when we're investing in real estate or wanting to get a bigger position that we want to hold for multiple years. This is the sort of stuff we come back to. A lot of the decennial cycles and the predictive cycles, which is all part of the indicator suite. So I'll show you how to turn this on now. This is for the S&P 500. Just in terms of the signal here at the tops, just turn on your settings, scroll down, show bar type, hit OK, and then that will come up at the top here. You can see these red little arrows, 1, 2, 3, from a significant point in the price action, way at the top. So that happened. We also saw it on other time frames. The weekly chart showed up, all-time high, 1, 2, 3 red weeks from an all-time high, and then a massive collapse from that point. Now, we don't try to forecast exactly what that collapse is going to be. It's to help us not get caught out in the market. It's letting us know that there is significant changes in sentiment, and then of course that leads to the price action from there. And then with the price action, we can use those swings to identify some key support levels along with entries and exits. But essentially that's to have a look at the daily. You can see it happen on the weekly. And then in the case of this video, we're seeing it happen on the monthly for BTC. So an even larger time frame here with the 3 red arrows from the top. Now this is just the first major thing that is happening right now for BTC. And the second would be part of a bar pattern, which I'll get to in just a sec. But we've now got the 3 red arrows. I mean, that happened once the low of March was broken down. You've got a lower high, lower low. Nothing to do with a red and a green. You want to look at the price action within the time history or the period that you're looking at. We're looking at a monthly. What did the price action do within that month? And it went lower than the previous month on the highs, and it was lower on the lows. Therefore, it is a down month. That is a down month. Not necessarily a red month like you can see here in April, but a down month. Lower highs, lower lows. Now we're on the verge of breaking this top here. And so it's just a few $100 away when we look at a chart of, say, Coinbase or Kraken or any of those. But for the sake of the analysis, I'm using the liquid index here because we have more history to look at, whereas Coinbase, of course, doesn't go back past sort of 2015 or 2014. So in this case, we got the 4 here, and to break past a few $100, that would then send this bar into a blue diamond. Now, the blue diamond is an outside bar. That basically leads to, or it's a signal of uncertainty. It's uncertain because you've got lower lows and higher highs. You can see that happened in January 2025. That was Trump being inaugurated, just pushed slightly higher than the previous month, and then it closed lower. So you've got lower lows, higher highs, leading to some uncertainty. So we could be on the verge of that. Doesn't necessarily mean it's a bad thing because, as you can see from the structure here, it's not happening at a top. It's happening further towards a low and within a trading range. So you've got a major trading range overall. You can break it down into the full trading range here, or even just going from sort of 70s up to the 90s or up to the 100s. Either way, trading range is the main thing. So moving back, having a look at history here, how it's never happened before with BTC. We've never seen a 3-bar system here break and invalidate on a monthly basis. We've seen multiple times where we've got the 3 red arrows from a very significant peak, which has then led to either a very significant bear market. Here is the first example. This is 2017, 2018, all-time high, $20,000. You can see the significance of this spike. 1, 2, inside. We've covered that before. And then another down bar right there. So the 3 from this top has led to the bear market. And then we take it back to 2011. Very significant spike out of a buck or a few cents up to 32 inside. Down, down, down. That's enough to call the signal here. And that held the market down for quite some time. So it didn't get back past that $32 for several months. So in the case of the monthly here, if this is able to turn around, this would basically be the first time that we've seen it from an all-time high flip from a down. So we had the 3-bar extremely bearish signal into potentially an outside bar, which then invalidates the bearish signal here. It could maybe it does turn into a bear market. But at the moment, the month has not ended. We've got 7 days to go here for the trading month of April. So it's going to be really, really important. We want to see if this can break past this top here at around $95,000. So looking back now at this next signal, so looking at the blues, you can see we've had these months before, this uncertainty. At the lows, it just leads to a little more time necessary to consolidate before the market breaks out. And of course, that's at the lows. And we have to identify how much time is left in that cycle as well. But this signal as well with an outside month, an uncertain month, rarely happens for BTC. Looking back at the entire course of its history, just where these blue diamonds show up, basically higher highs, lower lows, it's very, very rare. You got 1, 2, 3 in the first cycle, 1, 2 in the next cycle. There's a very minor outside bar here. And in 2021 or the 2018 to 2021 cycle, it's pretty much none except for in this trading range, which was extremely tight. And now we find ourselves in the 2025 cycle, starting from 2022, 1 that brought us into the low, 2, 3, 4 on the verge of a 5th one here. So if you take a look back at history, this has been one of the most uncertain cycles, especially through this first part and now into this later stage of the cycle. So speaking of the later stage of the cycle, what this could mean, looking at, well, history, we could see the uncertainty at the end of the cycle. So there's really 1.5 months to go that led it into this extreme peak. But in terms of the amount of months we're at the moment until the end, 29 months is where we sit, and the previous cycles have all ranged from 35 to 37 months. So let's just take a look back at 35. That basically gives us about 5 or 6 months from this point. So if we are to get this outside month, the 5 to 6 months from here would lead us somewhere around October. And if you've been following the channel, we are very much tuned into Q3 as being a potential end for the cycle as well, or at least a potential end for a peak for BTC. And that's based on a couple of other indicators. One in particular is MicroStrategy and where it sits in its pattern. We'll cover that on a future video, so make sure you like and subscribe to the channel as well so you see it pop up. So that's one of the first instances there. And it's not that it has to end there, it's just we want to see how the price action evolves at that point in the market, which is a key date that we're looking at in the future. Now, the 2017 cycle also saw an outside bar towards the end. However, there were still several months to go until that peak. So the outside was about 9 months from the top. That occurred at the 26-month point. So you still had a little bit of time left there, and then things went absolutely parabolic towards the end. And as you can see from the previous cycle, there were no outside months. There wasn't that uncertainty. It was a big boom, massive correction, completely deflated the market, and then there was a very low volume rally into a new all-time high that then led to, well, obviously the bear market. Naturally, the question arises, well, what if this remains as 3 red down arrows? Essentially, it's just increasing the probability that either A, we'll see a bit of a lower swing top, or a weak rally into a new all-time high, like we saw in December and January. We got the signal, and it was a weak rally into that top. It was hysteria for Trump getting in, crypto president, all that sort of thing, and the price only went less than 1% above the previous high. So you've got that side of things, basically like a weaker rally, just increasing the probabilities like we've seen throughout history. When you get the signal, it's essentially a weaker rally into those highs. Or B, I think it's going to shoot up to something like an end peak here of 2013, and it doesn't necessarily give that much opportunity. This is still, although you get a very big price move, it's still a weak rally. Basically, you could think of it like acting prematurely, and you could add any sexual innuendo to that you want. Yes, you're going to be strong out of the gates, but are you going to last the distance? And are you going to get out in time? That's pretty much what this sort of pump looks like in 2013. Short time, you get heaps of excitement for a very short period of time, and then it's a long time to lick your wounds and figure out what the hell went wrong. Now, I've looked at this bearish signal for BTC and how it could potentially be invalidated, just less than 1% away from being invalidated. And we wanted to look at what this means for cryptocurrency and, of course, altcoins. And finally, how is this all happening in terms of the stock markets and, of course, the economy? Now, if you want to put all of this together into a trading plan that's going to work for you, check out TIA Premium. There is a link in the video description that will give you access to a lot of courses here that you can go through in your own time 24/7 to put it all together in a plan that suits your trading style. And you can apply the strategies to your style of trading. That could be across any assets like the stock markets and, of course, cryptocurrencies as well. So what does this look like for the cryptocurrency market? Well, in the total cryptocurrency market cap, we have 4 red down arrows, which means we've already seen this signal play out from the peak, from the all-time high. Now, that would suggest that we're potentially going to see a weaker rally into a top, like we just looked at with BTC. Could be a lower swing top or maybe a slightly higher top, but at a sort of a lacking volume at this point, or basically lacking participation, something like what happened in the previous cycle. You had this big run up, massive correction, and then it was just a much less interested retail hype into that final peak. So this is going to be one to watch for sure because of this signal already. And in terms of other altcoins, well, we just have to look at where the position is so far. In terms of ETH, that double top is still in play. There's a low at the moment forming, but is it going to get back to any sort of positions of strength? Looking at, well, one, obviously the bars that we have been following, the overbalance in time and price that I've been talking about on the channel, and of course the swing charts as well, along with support and resistance. So lots to cover here when it comes to other altcoins in the space and what is going to get back to a position of strength, even though the total market cap is in a slight area of weakness now that we've seen these 4 bars play out. So really be selective with the altcoins you want to trade. Look for stuff that is in a sign of strength based on some of the analysis that we've talked about before on the channel, the indicators and all sorts that you're looking for here, in particular the swing chart. So how is this happening? What's taking the market? What's the interest here? Well, of course, easy to say. One is Trump, tariffs, and of course what he's doing with the global economy, or at least the position of the US within the global economy. Now, in terms of the markets themselves, they've found some stability here in the S&P 500. We're above the 50% level, 5,200 points, but below the major 50% level at 5,500 points, and still below the swing bottom where everything basically turned to shit and the market broke down from the level. That's at 5,500 points. The good news is the stability is trying to find its way back into the market. We've seen the VIX fall as well, which is the volatility. And should the market continue down, well, it's still tracking the cycle that we've been following of 2025. That one you can find in the TIA indicator suite dashboard as well over here at predictive cycles. Go back and check some of the videos that we're following here. So I don't think that the cycle is over at all. It just seems like enough damage has been done that we need longer to clean up the mess that was caused over the period of March and early April. So if that's the case, just going to take a little bit more time here, and that could potentially lead to a little bit more time needed for Bitcoin to find its pace at this stage. Now, that's the first thing, basically looking at the stock markets and what the markets are doing. What else we can see is that the US dollar has obviously been coming down from this point. It's finding a slight base at the moment, still getting rejected at around 100, and across the board, there is some stability. You've got the 10-year yields beginning to at least hold some ground here, but it's not in the direction that you'd want to see this longer term. So I think we're on our final legs, as I've talked about several times before on the channel, a bit of a ticking time bomb here. Now, this time bomb could go for 12, 18 months. That's the difficulty of the end stage leading into the peak of the 18-year cycle. We're also seeing those signs in the bonds. They have dumped heavily, but again, that volatility is just drying up at the moment. So it's kind of what you want to see for the stability to come back to the market, at least for an attempt at higher prices for the S&P 500, which would also mean you'd see a little bit more strength come back into BTC as well. We also saw in the last couple of days a significant correction for gold. 2 big days off the high of 3,500 after retail got extremely interested at 33, 34, 3,500. It was across headlines like $5,000 gold $5,000 per ounce for gold. That sort of stuff came up in the last couple of days. And of course, now we've seen a reasonably significant correction here for gold. How this is happening, or why I think we're beginning to see at least a sign of growth and some stability back for BTC, is that we're seeing some drop in the volatility for the markets. S&P's holding steady. We're starting to see some slight signs of strength there. Gold has come off the big rush to those highs at 3,500, and you're seeing some stability with the bonds as well. Now, it doesn't mean that everything's going to go back to normal. I think the damage is done, and it's a ticking time bomb now towards the end. So stay safe out there. Make sure you're choosing, well, as best as we can, the assets that are going to perform well in this last phase into the peak. And of course, have your plans in play in case we do get those invalidations. At the end of the day, the black side of the chart is the difficulty that we all try to trade to make the most out of the markets. So the countdown is on. We have 7 days to go, just under $500 to eclipse the high of March. Can it happen? Well, I hope it does. Stick around, like and subscribe, and I'll see you guys back here at the next video. Till then, take care and peace out.